Welcome back. You're still watching Nedbank Business Watch. Thank you for staying with us. Today I'm joined by Treasury Dealer at Nedbank Eswatini, Nozibusiso Teme. She's here to talk about Nedbank Investment Solutions. A very good afternoon. Welcome back.
Thank you so much,
Yeah.
Lulu. It's been a while.
Yeah. So today we're talking about investments. Why should we invest? Why is this topic important to talk about?
So, Lulu, the topic of investing is so important because it literally has the potential to transform lives and to secure futures. Yeah. And in an economy where financial stability is so crucial, it's not just a skill, it's really a necessity. Mm-hmm. At Nedbank, our slogan is to use our financial expertise to do good. And part of that is encouraging every Liswati to have a regular conversation about how to invest, how to save, and how to take money seriously.
All right. So the last time you were here, I think it was 3 months ago. I think it was May this year.
Yeah.
You took us through some of the investments solutions or options that Nedbank Eswatini offers. So what are we talking about today specifically?
So today we'll be unpacking some of the things to consider before saving and investing. Mm-hmm. But I think because it was so long ago when I was here, it's really important for us to just do a quick recap on some of the Nedbank products that we spoke about last time. Mm-hmm. So I'll start with our shorter term products, which is our savings account and our call account. These accounts have a variable interest rate, which means whenever there are changes in Eswatini Prime, whether upwards or downward, the interest rate on that account reprices, right? Then we have our notice deposit accounts, which are available in 32 days, 60 days, and 88 days notice. And that account also has a variable interest rate. It has funds that are available after the notice period has lapsed. So if you have a 32-day notice, for example, in order to withdraw those funds, you need to give 32 days notice, and then you'll receive them after 32 days. And then also it has a top-up option. So all the accounts I've mentioned all also have a top-up option. So if you are trying to accumulate funds, you can keep adding as and when you have money. Yeah. We also have our fixed deposit. That one has a fixed interest rate. The tenor is also fixed, and it has no top-up option. So you would ideally put a lump sum in a fixed deposit account. We have our floating rate term deposit accounts. A floating rate term deposit also has a fixed tenor, but the difference there is that the rate is floating and it's linked to Eswatini Prime. So when there are changes in Prime, the rate on that account also changes accordingly. Okay. And then lastly, we have our negotiable certificate of deposit, which is a new product to Nedbank, a first in the market product. And with that one, you have a fixed interest rate, you have a fixed tenor. You also can't top up, so you can't keep adding funds into that account, but it has a buyback option. So if you have a 12-month NCD, for example, because in short it's an NCD, and then before the 12-month lapses, you run into an issue where you need those funds. You can then sell that that instrument back to the bank and get the money in return for that.
Right. So Nozi, what does one need to consider, before making an investment decision? Because I know some of us, if not a lot of us, are in the dark. We've always heard people advising us to invest your money. Do I need to be financially stable? What do I need to consider?
So, Lulu, there's a lot to consider when it comes to investing. But I think just for the purpose of this conversation, we'll be covering four things. The first is understanding your needs and what you are trying to achieve. The second is understanding the interest rate environment that you're currently in and what the expected interest rate environment is for the future. Yeah. The third is risk management. And then the last is diversification, which is a risk management technique.
So why is it important for a person to understand their needs? For instance, a pensioner, take us through the importance of understanding exactly why investment is important and what your needs are.
Okay, so it's very important to understand what your needs are and what you're trying to achieve, because that then leads you to understand what your investment strategy will be and what kind of product to select in order to achieve what you're trying to achieve. Yeah. So you mentioned a pensioner, and that's a good example, because let's say you have received a lump sum payout of sorts. It doesn't necessarily have to be a pensioner, but we'll use that as an example for now. So with a pensioner, you you know that this is your last payout for probably the rest of your life. You need to make sure that it lasts for as long as possible, because it's the money you're going to have to live on from now on. Which means you do desire a good interest rate. You probably want to invest the lump sum and maybe receive interest payments, and live off the interest, in order just to make sure you always have money available in your lump sum collection.
Okay.
But more importantly, you want to make sure that that money is kept safe. So you've spent the past 30, 40 years, however long you've been working, you've reached 60, you retired, you received your payout. This is money you've been saving for all those years. So basically, you have been investing in your future. And you need to make sure that wherever you then invest those funds, you are comfortable that they are safe and you will always have access to them when you need them. So if you are a Nedbank client, for example, and you are a pensioner, I would likely suggest to you a fixed deposit. Our fixed deposits pay interest either at maturity, or monthly, quarterly, half yearly, or yearly. So if you invest for 2 years, you can still get a yearly payment of interest. But mostly pensioners prefer our monthly payments, because then they can live off that interest for the rest of their lives, and the capital is secured.
Yeah, speaking of interest, let's talk about the interest rates. Why is it important to understand the interest rate environment and how it affects your investment decisions?
So that one is very crucial, Lulu, because interest rate environments directly affect what interest rates we will quote you as a bank. And you need to understand where you are right now and what the future interest rate environment might look like. And to just drive this point, I'll use the scenario of the time of COVID-19. So from the beginning up until just after COVID, as the economy was recovering. So in 2020, COVID-19 starts, and you might remember that during that time, the Monetary Policy Consultative Committee, which in short is MPCC, started to reduce interest rates to sort of cushion the impact on the consumer. And while the consumer was enjoying that, the investor was losing out on some interest due to that. And you then, as an investor, need to understand that and understand what the expectation is. So at the beginning of that cycle, economists were already projecting that we are in a downward interest rate cycle, right? So if you know that projection at the beginning, then when you make your investment, you know you're looking for something that has a fixed rate, so that you can fix the high rate before rates go down for whatever period. So it could be 12 months. We have 12-month fixed deposits. We have 24-month fixed deposits. And then you're stuck at that rate that we agreed at inception, even when interest rates are going down months later. And you need to understand that so you can pick the right product for yourself. Then we go into 2021. 2021 interest rates were muted. But muted at the low level that they ended 2020 at. And that happened throughout the year. So if you had invested at the beginning of the upward cycle in 2020, if you had invested in a fixed deposit for 2 years, during that 2021 period where interest rates are just at a consistent low level, you would have still been enjoying a high interest rate up until that fixed deposit matures. So you need to understand those things too. Then going into 2022, interest rates start to increase, right? Economists also did project that there would be an interest rate increase in 2022. So they start to increase up to the levels that we're at now. And if you are an investor at the time, so at the bottom of that curve, and you want to invest, you don't want to lock your funds in an instrument that has a fixed rate, because you are fixing a rate at the low levels that we're at. You would rather invest in an instrument that has a floating rate, so that as interest rates are increasing slowly, you are also moving up with the interest rate. So if the floating rate is linked to Eswatini Prime, whenever Prime increases, your deposit or your investment also increases. So it's important to understand what the interest rates look like at the time. And at Nedbank, we are always willing to share with our clients what our interest rate expectations are. You can contact your banker, you can contact us in Treasury directly, and we think it's important to share that information with our clients so that they can make wise investment decisions.
So that's one of the ways to effectively manage risks, because obviously, investing comes with risks.
Absolutely, that is one of the ways to manage interest rate risk.
Okay.
And our forecasts, by the way, I need to disclaim this. A forecast is just a forecast. We forecast what the expectation is based on what is happening right now.
Okay.
So there is a chance that in future that forecast will change, but it's important to at least know what's happening now when you have to make that decision.
All right, just before I let you go, we have a minute. Tell us more about diversification before you get into your contact details and how your clients can reach you.
Okay, so diversification is a form or a technique of risk management, because we know how important it is to manage risk, especially when we're talking about money. There is a balance between risk and reward that we have to manage, because not everything that glitters is gold. So we do have to manage that risk and reward, and diversification is a way of managing that. So if you have money, a lump sum payout that you want to invest somewhere, what would be ideal is, as you are exploring the universe of investments, you take portions of that money and you put them in different investment avenues. And in fact, it would be best for you to put them in investment avenues that have different risk portfolios or risk profiles even, so that if it happens that one of your riskier investments falls through, you at least have something to rely on going forward.
Okay, great. So how do your clients reach in case they have more questions more than this?
You can reach us at help desk. You can call our help desk on 3278-1999, or you can call us directly at Treasury on 3278-1145 or 3278-1325. We also have a group email address, Treasury Eswatini @nedbank.co.sz.
All right, thank you, Zibu. Well, there you have it. If you want to invest, do not hesitate to contact Nedbank Eswatini. Let's take a break. Sabia Koramaj.